Bollinger Bands, Bollinger Bands, Bollinger Bands. Yep, you've guessed it, we're looking at Bollinger Bands in a lot of detail today. Hey traders, it's Andrew from Epic Markets, and we're going to go through and look at exactly how to add Bollinger Bands onto your charts, how to use them, which settings you need to be using, and I'm going to go through and show you a trading system that you will have never seen before. It's a unique way of using Bollinger Bands to identify high quality trade setups, and we're going to go through and see that and more right after this. Today, you're going to learn how to take your charts from looking like this to looking like this. So the first thing that we're going to need to do is add the Bollinger Bands onto this chart to get it looking somewhat like this one. And the way that you do that inside of the Epic Markets trading platform is to go to the F at the very top, on the top toolbar, down to volatility, and you will see Bollinger Bands. Now, Bollinger Bands, funnily enough, are a measure of volatility. And if we just add them onto the chart now, you can see that it gives us several options to take a look at. Now, the default is 20 periods and 2 standard deviations. In fact, let's just make this all a lot bigger for you so that you can see exactly what's going on. Okay, so let's go to the F at the top. Let's go to volatility. And let's go to Bollinger Bands. And now you can see we've got a 20 period, 2 standard deviation, and it's simple. Now I'm going to just change the colors here. I'm going to make them hot pink so it really stands out. And I'm going to just make these lines a little bit thicker so it's easier for you to see, especially if you're watching this on a cell phone. Now, there's 3 lines on Bollingers. There's the main or midpoint, there's the top, and there's the bottom. Now, if we click OK, we can see them produced now on the charts. And the simple way to explain this is that the middle line is just an average. So we're using a 20 period Bollinger Band. It is just a 20 simple moving average. So just think of that middle line as the midpoint, a 20 simple moving average. And then the upper and the lower bands are just measuring how volatile the price is. So you're going to see periods of time where the Bollinger Bands get further apart, and they're getting further apart because price is moving more aggressively in one direction. And when they squeeze together like this, you can see that there's less volatility, and so what happens is the bands contract and get closer together. So Bollinger Bands are a measure of volatility. There's 2 bands, the upper and the lower, and the 20 moving average in the middle. Now, with these Bollinger Bands, you're going to notice that when they expand, there's price movement. And you can see going back through the charts through here, when they're contracting and squeezing together, there's a lot less price movement. So you can actually use Bollinger Bands on a higher time frame to determine the trend and then trade that on a smaller time frame. Now, while we're not going to go into that in this video, it is a very feasible way to use Bollinger Bands is go up 1 or 2 time frames, look at what the Bollingers are doing. That'll tell you if the market's actually moving or if it's going sideways and contracting, and you can use that as a filter on the smaller time frames. However, today we're going to be primarily looking at a 1 time frame trading system, or just focusing on one specific chart rather than jumping around between several. Now, I'm on the Euro USD here now because I'm on a 5-minute chart. I don't want to be trading something like the pound New Zealand that's going to have a more expensive spread. Euro dollar is the most liquid forex pair in the world, and it really is what you want to be trading on a smaller time frame because you get very small transaction charges. Now, with these Bollinger Bands, just going back through, you can see on the chart here how they have massive periods of trend, and then there's also periods where the market really is going sideways. And that 20 moving average in the middle, whichever way that moving average is pointing, just like you will have seen in previous videos of mine on moving averages, that moving average is telling you which direction the market's going by looking at the angle. So if the angle is pointing down, the market's moving down. The angle is pointing up, the market's going up. And these bands measure something called the volatility, and they do it using standard deviations of price. So with Bollinger Bands, we're using typically 2 standard deviations. And 2 standard deviations mean that 95% of price should be inside these Bollingers. And if price goes outside these Bollingers, well, guess what? All of a sudden, we've now got ourselves something that doesn't happen very often. Now, the generic way of trading with Bollingers, a lot of people come into Bollinger Bands and just buy the low, sell the high. Buy the low, sell the high. And a lot of people try and just buy low, sell high, and scalp using Bollingers. And in periods like this, where it's choppy and sideways, and you can sell the peak, buy the bottom, it looks like it works. Again, through here, selling at the top, it looks like it works. The trouble is there's too many periods, even on something like a 5-minute chart that we're on right now, where you get these big volatile moves and you get taken out of your trades. Okay, so that's the first thing. You don't want to be buying low, selling high, and trading the bounce off the Bollingers. Plus, these things are moving. I know I'm on a 5-minute chart right now, but let's go down to a really small time frame. Let's go down to a 10-tick chart. This is going to be incredibly fast, hopefully. You'll see how these Bollingers are actually moving. You can see the lines moving at the end here. To get a bit more movement, you can see it easier on the top one, but see how it's moving in real time? So trading the exact bounce off of the bottom and the bounce off the top is actually pretty hard because these lines are moving in real time. So we don't really want to do that. It's very challenging to enter the trades correctly. Now, back onto a 5-minute chart, the same thing is happening. We have price moving and the Bollinger Bands moving at the same time. So you might think it touched here. It actually probably touched somewhere like this instead, higher up on the candle. So that's the first thing. Bollinger Bands are moving in real time. Don't think it's as simple as just buying low, selling high every time they touch. That's not going to work. Now, the next thing that people try and do is trade Bollinger Band breakouts. And they'll wait till price closes outside the Bollinger Band, and then they'll try and trade the move to the upside. But the challenge with that is that periods like this where it breaks outside, comes back in again, breaks outside, comes back in again, breaks outside, comes back in again. And neither of those approaches work particularly well in today's markets. So first things first, you don't want to be trading the bounce either side. And secondly, you don't want to be trading the breakout because unless you have monster moves like this, it doesn't really work that well. So if we're not going to do those 2 things, what are we going to do? Well, the first thing that we actually want to do is simplify the charts and get rid of some of the noise that we have going on here. Smaller time frames like 5-minute charts are noisy. There are algorithms, high frequency trading systems on the smaller time frames making them noisy. So one of the best things that you can do, especially with Bollinger Bands as well, is get off of time-based charts over to Renko charts. Now, I'm going to go to a 2-pip Renko chart here. Before people start screaming at their phones or screaming at the computer saying, how on earth are you trading a 2-pip chart? Well, when you're trading Euro USD, the spread is practically zero. It's like 0, 0.1, 0.2 nearly all the time. In fact, right now it is 0, 0.1. It's so small that the spread is almost inconsequential. So I'm just going to go ahead and get rid of those lines again now. And if you're on MT4, you can't easily produce Renko charts. So you're going to want to go to trade.epic.markets and you're going to want to get access to our trading platform where you literally can click a drop down and choose the Renko chart that you're after. And similarly, if you're on TradingView, it's a web-based platform, but unless you pay quite a lot of money each month to TradingView, you won't get access to Renko charts, at least in real time. So I think it's $59 a month you have to pay TradingView to get access to Renko charts, whereas we just provide it all for free. Now, that's just looking at the Renko charts and the Bollingers. We need to make sure that you understand exactly how these things are moving and exactly how to trade them. So these Renko charts are essentially, rather than looking at time, they're now only looking at price movement. So you'll see at the very bottom of the chart down here now, the times are changing all the time. And if we get a lot of price movement all of a sudden, then we get a lot of candles appear. And if we get very little price movement, then we get very few candles appear. And that's the beauty of Renko charts. They get rid of some of the noise that the smaller time frames are famous for. Now, if we look at this Renko chart and we look at these Bollinger Bands, if I just squeeze it out a little bit, you will notice that they don't actually intersect all that often. But when they do, we can get some moves back to the midpoint and even some moves over to the other side. Now, it's important that you understand with Renko charts, especially as this one is building right now, that price will have moved a little bit above this level. It will have moved a little bit above this level. And you see how it's moving around right now, and it's currently a blue bullish candle. Let's go down to a 1 pip Renko chart and really see exactly how they move. So very little price movement right here, right now, but let's just see over the next couple of minutes how we get 1 pip price movement on a Renko chart, how it's displayed here. So you can see it's not actually plotting any kind of a block. Right now the price is just moving inside the range of this one. You don't get any overlapping candles. See that? There's no candle overlaps the one before it. Now, what you really want to pay attention to here is that we aren't going to get a brick until price goes up by 1 pip, because I'm on a 1 pip Renko chart, or down by a full pip. If it just sits there in the middle like this and chops around, then it's not going to actually produce a brick yet. So you can see it's still chopping around in the middle here. There's no new brick. Now this is really, really useful for smaller time frames, as I said, to clean up the charts and get rid of the noise, because we only really get directional movement appear, which is fantastic. Now, with this chart here, I was hoping it'd move a little bit faster than this, but again, we're not going to get a new brick appear until price moves up by 1 pip or down by 1 pip. And that is what actually creates the brick, and it's the reason why the times at the bottom here aren't just a standard amount of time, it is over a period of time. Okay, so now that we've seen that, let's just go through and really understand. Let's go back to that 2 pip chart. That means that this move here could take a day or could take a minute, because 2 pips, 2 pips, 2 pips, 2 pips, 2 pips, 2 pips. And then for this bearish candle to appear, it's had to move down by 2 pips. And the beauty of this is that we get much smoother, easier entries. But bearing in mind, at this point at the top up here, we could have seen price go up by 1 pip and then turn around and go down. Okay, so when you see this high point and think that's the high, you can't assume that's the high. You have to add 1 extra brick on top to play it safe. Now, there's actually a great trade setup happening right here, right now for me to walk you through. But let's say, for argument's sake, that we trade only when price hits the upper Bollinger as a Renko brick, and then we wait for the opposing brick. So it hits the top, and then we're waiting for the opposite color. So that now means that we're going to be entering here. Our stop loss is not going to go here. Okay, our stop's not going to go here. It's going to go another 2 pips on top. So you have to add an extra brick on top, which would be around here. So that's our risk on the trade. And our return, if we're risking 1, 2, 3 bricks, we'd be looking to make 1, 2, 3 bricks. So it's pretty straightforward in terms of calculating wins and losses. Now, if we're looking for 3 bricks for a win, that means that we've risked 1% of our account to make 1% of our account. And we've risked 3 bricks to make 3 bricks. Now, the great part about that, with risking 3 bricks to make 3 bricks, or risking 6 pips because it's a 2-pip chart, is that we know exactly how many pips we're risking every single time, which means we can very easily calculate our trade sizing every single time because we know what money's in our account. We know how many pips we've got at risk, 6 pips each time on a 2-pip chart. Therefore, you know exactly what lot size you want to be using on every single trade, which is very, very useful. Now, the Renko really helps, but you need to use the Bollinger to know exactly when to trade. So let's just go through this. Rather than selling as they touch, we wait for the change in color. But on top of that, we're going to use these Bollinger Bands to help us determine when the market's actually going to change direction. So we're using multiple confirmations. Now, do you notice when price goes down here and touches this lower Bollinger? Okay, this is still pointing up. The lines are still getting further apart. When the lines are still getting further apart, there is still movement. When the lines are still getting further apart, there is still movement. When the lines start getting closer together, that is when the movement has stopped. So we hit this upper Bollinger. The lower level has pointed up, is turning up. That means that it's likely to come back down again and give us at least those 3 bricks that we're looking for. So let's look at this one here. Hits the top. At this point here, we've still got the line pointing down. But at this brick, as it closes down here, at the close of that brick, it has flicked up. And at this point, they are getting closer together. So at that point, we know it's likely to move those 3 bricks back down again. Similarly through here, this patch here where you'd be looking potentially to sell, we're not going to be selling through there because it's still moving down. When it hits up here, now we're interested because it's moving up. And that one actually fails, but we avoided taking the losses through here because we looked at the Bollinger Band. The Bollinger Band must be squeezing back together again before we take the trade. And sure enough here, we hit the upper Bollinger. We're pointing down. We have the white brick, which means that it's changed, it's now a seller brick. This is now pointing up. So the opposite to the price, the opposite side turns in. That tells us that it's likely to move in the opposing direction. So that means now that we're going to be having an entry level. Our stop loss is 3 bricks. So there's one more brick above that, which is going to be about here. And we know that we're aiming for 3 bricks. 1, 2, 3. We'd be hitting target around here. So 6 pip risk, 6 pip target. Once you're in the trade, you have a stop loss. You have a reward to risk target of 6 pips from risking 6 pips. If you're risking $100, you're looking to make $100. If you're looking to risk £75, you're looking to make £75. So it's a 1-to-1 reward to risk each time. And the benefit of that is that you haven't got to be in front of the chart waiting for these bricks to actually form. You can just get into the position and have a target. Now look at this here. We have this touch at the top. We have the Bollinger starting to turn in, gives us the move. We have the touch at the bottom here. At the very low point, it's still pointing up. By the time we get the reversal brick, this blue one down here, which is bullish, this is now flicked in. Therefore, we're buying here. Stop loss, not here, but lower, another brick lower, which is about here. And then the take profit is just going to be 3 bricks profit, which is going to be around this kind of a level. Okay, and we'll be waiting now for this to move 3 bricks in our favor, but we'd be off doing something else rather than sitting watching it in front of the screen. Now, if we go back through and look at this, let's just go back over a period of time so you can really see what's happening. We've got both trend and also sideways to look at, which is great. And this is probably the good time to start looking at it. So we have price here hitting the upper Bollinger. We do nothing until we see a reversal brick. There's the reversal brick. At the reversal brick, is the opposite side pointing in? Yes, it is. Okay, so here's your trade. We're getting short on this candle, risking 3 bricks to make 3 bricks. We're selling from here. Now, at this point, you're walking away from the screen and we get the 1, the 2, the 3 bricks. You'll have hit target somewhere around here. And before you start screaming, hang on a minute, how do you know it definitely got to take profit? Because the candles, these bricks, could have gone down by 1.5 pips before it turned around and went up by the full 2 pips. Okay, just because you see the high here doesn't mean it was the high. It could be anything up to 1.9 pips higher because I'm on a 2 pip chart. The low here could have been an extra 1.9 pips lower. I can't see it because that's not how Renko bricks are calculated. They only show complete movement. So that one there would definitely have been a winning trade. Now here's our next one. We hit the top. We get the reversal. Is the opposing side squeezing in? Yes, it is. So we've had ourselves one win. We've now got this trade, which you don't need to be a genius to work this one out. It's obviously lost. Hasn't gone down 3 bricks, losing trade. Now we've got ourselves this touch at the top, opposing color, lines flicked in. Yes, we're good to go. So we've got the entry level going here, stop loss level going 2 pips above this, which is about here. And we need the 3 bricks for our take profit. 1, 2, 3. We'd have been filled somewhere around here. So far we've had a win, a loss, and a win. Now that's not a huge amount of data to work off of, but price goes down, hits the lower Bollinger, reverses. The opposing side is squeezing in. I'll hover the line so you can see exactly. Up here has pointed in. Let's zoom right in so you can really see it. Something else you can't easily do in MT4. So here we go. It has now pointed down and in. It is a trade. We're buying here. Stops down here. 3 bricks. 1, 2, 3. We've hit a winning trade. Now carrying on from there. So now we've got 1, 2, 3 wins and 1 loss. We've hit the top. We've got a reversal. Lines pointing up. We try and trade short. We lose. So we'd be selling here. We get stopped out. So we've had a win, a loss, a win, and now a loss. So on 5 trades here, 3 wins and 2 losses on a 2 pip chart. So we've got 6 pips of risk for 6 pips of return. And this is the euro against the US dollar. So very, very, very small spread. Very, very, very tradable. We hit the top. The opposing line is pointing in. We're getting short. 1, 2, 3 bricks. We've hit our next winning trade. So we've now got 1, 2, 3, 4 wins and 2 losses. Carrying on from there, we have price hit the lower Bollinger. So we're looking to buy, and the line at the top is pointing in. So they're squeezing together. It's reversed. So we've got the blue here, means it's actually reversed. We're looking to buy just above there with the stop loss. 3 brick take a profit. 1, 2, 3 with a hit target just here. So we're now at 5 wins and 2 losses. Now this is a bit of a patch here which perhaps could cost us some money. So let's look at this. It's gone down and touched the lower Bollinger. It's reversed. Is the Bollinger pointing in? Absolutely. So we're going to buy through here and we're going to get stopped out. But bearing in mind we were at 5 wins and 2 losses, and this is now 5 wins and 3 losses. So we're still definitely ahead at this point. We then have our next touch, next point up, Bollinger Bands squeezing in. This is a losing trade. So we're now at 5 wins and 5 wins and 4 losses. Then we go through the touch at the bottom. It flicks up, pointing in. And this one here, we're now completely break even. 5 wins, 5 losses. Now, this is a pretty obvious trend. I'm purely looking at this like a black box system, but 5 wins and 5 losses break even over this short period of time. Carrying on from there, we have the touch of the lower Bollinger. It flicks up. At this point in time, yes, it's obviously pointing in on the far side. Entry, stop, 3 bricks, we've hit target. So we're now at 6 wins and 5 losses. Hit the top, bottom flicks in. We've got the reversal trade, 3 bricks down. We've now got 8 wins versus, I think it was 5 losses, or 7 wins versus 5 losses. We're definitely ahead. Here, this is a great patch to look at. We've hit the upper Bollinger, we've flicked over, but we're still pointing down through here, so it's no good as a trade. We hit the lower Bollinger. Again, these didn't touch. We hit the lower Bollinger. It's still pointing up through here, not a trade. So here, no good, no good. We reverse, and just look what happens. We get the change of color on the bricks. It rolls over at the top. We have ourselves a trade. Entry, stop loss, 1, 2, 3 bricks in your favor. Now, how do I know that you didn't get stopped out here? Because if the price went lower than this level, there would have been another brick to the downside, and there wasn't. So therefore, we'd have definitely got our 1, 2, 3 bricks. We've made money. So we're now 3 trades ahead overall. We've taken about 12 trades. We're about 3 trades ahead overall now. Next one sets up, comes down to the bottom, reverses. This is flicked in. Perfect. 1, 2, 3 bricks. Another winning trade. We're 4 trades ahead now. Doesn't quite touch there. Touches the top. Reverses, but this side is still pointing down. So we wouldn't trade this one, which is a shame. We wouldn't trade it. Similarly here, touches. Hasn't actually turned in yet. No trade. Okay, next touch of the Bollinger's down here. Reverses. We've got the Bollinger turning in. Therefore, entry, stop, 3 bricks. We've hit target. So we're about 5 trades ahead now. Carrying on from there. And this is only over the space of a couple of days. So you're definitely ahead at this point. Comfortably. It flicks up again after touching the Bollinger. This is squeezing in. We'd trade here, we'd lose. Comes back down, touches again, reverses. Definitely still pointing down. We get our winning trade. So we're back again to 5 net winners. Touches the top. Look how it flicks in on the opposite side. There's your reversal, brick. Entry, stop, 3 bricks. We've won again. So we're like 6 trades up now. And this is just carrying on again and again and again and again. You can see through here, it doesn't quite touch. Touches through here. We have the reversal brick here. It's obviously pointing up. I mean, I can't make it point up much more than that. That's pretty obvious. We're going to be looking to sell. The stop loss. And then 3 bricks for take profit. We've done it again. You're 7 trades up. Touches the top. Reverses. That's your entry just after the reversal. Is it pointing up? Yes, it is. Stops up here. You get your 3 bricks. You're now 7 trades up. Touches the bottom. It's obviously pointing in. There's your reversal. You get your 3 bricks. You're 8 trades up. Now, even if we go through this big trendy patch through here now, touches the top, reverses, but we still haven't had it flick in here. No trade. Touches the top, reverses. This still hasn't turned in yet. No trade. And that's the trick. Rather than just selling because it's touched it and reversed, we're actually making sure that Bollinger has turned in to be certain that we've got the declining volatility, which means we're likely to get those 3 bricks as a winner. All right, now, I think we're about 8, 9 trades up right now. I mean, I could keep going, but you can see just looking at this sideways patch, it's going to go through it, even more winning trades right now. And again, even more winning trades. So without me having to really kind of spell it out to you, you can see for yourself, this is a very profitable approach. As a day trading approach, it's a 2-pip Renko chart, and to get access to Renko charts, all you need is our platform. You can go to trade.epic.markets and you can download our platform from there. That's trade.epic.markets. And you can also go to learn.epic.markets. If you want to learn more stuff like this, you want to improve your trading, get access to a free training series of videos, it's learn.epic.markets. And we'll go through and show you profitable trading approaches on the smaller time frames, day trading or swing trading on the higher time frames that you can use with our trading platforms And you can see just how easy it can be to pull profits from the markets. Now, of course, if you haven't already, make sure that you smash the like button. It helps make sure that people just like you get to watch videos just like this so that we can help you and them become a better trader. And of course, if you haven't already, make sure that you subscribe to the channel. By subscribing and using the little notification bell, it means that we're able to notify you every time that we release a new video to help you become a better trader. That's it from this video. Hopefully you've learned something completely new that you've never seen before, and I'm looking forward to hearing about your results in the comments below.